I'm Myra Seha, and you're listening to Venture Unplugged. From deep tech crypto to direct-to-consumer brands and products, each week we dive in deep into the lives and challenges of today's most successful founders and investors. New episodes launch every Tuesday. Sign up for our newsletter at ventureunplugged.com and subscribe on iTunes or Spotify. Follow me on Twitter at MyraSeha007. I'm so excited about today's episode with Ben Cogan, the founder of Hubble Contacts. In this episode, we discuss what he learned from being an early employee at Harry's, why he launched Hubble, how he grew it into a multi-million-dollar business, and what advice he has for founders looking to launch a direct-to-consumer brand. This episode is brought to you by Qtum. Qtum is the first proof-of-stake smart contracts blockchain. It has been around for over 2 years and has over 4,000 nodes around the globe. If you're tired of paying high fees on other smart contract platforms, head over to qtum.org. That's QTUM.org and start building your own low-fee Solidity smart contract today. This podcast is co-presented by Blockworks Group and Republic. Blockworks Group is a blockchain events and media production company. For exclusive content and events that provide insight into the crypto and blockchain space, visit them at blockworksgroup.io. Republic is an investment platform that helps companies raise capital from retail investors. For more information, please visit republic.co. In today's episode, we interview Ben Cogan, the co-founder of Hubble Contacts. He's someone I admire, not only because he has built an incredible brand and company, but also because he has great insights into the direct-to-consumer retail and health space. In this episode, we dive in deep into some of the challenges and opportunities of direct-to-consumer brands. Ben co-founded Hubble Contacts with Jesse Horowitz. Hubble is a monthly subscription service that provides daily disposable contact lenses to your home for $30. Hubble Contacts has raised over $70 million from VCs like Founders Fund, Greycroft, and Wildcat Capital Management. Ben was an early employee at Harry's, where he was mentored by Jeff Rader. He graduated Princeton University with a philosophy major and has been named Forbes 30 Under 30. Now, enjoy the show. And if you like today's episode, share it with a friend. Remember to subscribe and rate on iTunes or Spotify, and join our newsletter at ventureunplugged.com for more insights on this episode and more. You were at Harry's, right?
Yeah.
Tell us about that experience.
I was at Harry's. Yeah, Harry's is a great company. It's a shaving company founded by one of the Warby Parker co-founders. Great team, really cool business. And when I was there, I noticed the price of my contact lenses spiked. 2015, it was a really similar story to what I'd kept hearing about from the Harry's guys about why they started Harry's, and they were ripped off when they were buying their Gillette razors. And so eventually it didn't take too long to realize that the Harry's business model could be applied to the contact lens space. But before that, I just had a ton of fun at Harry's, learned a lot about direct to consumer, about how to build a brand, how to build a business, and here we are.
What was the key takeaway that you got from there that has been most applicable to your world now?
Wow, it's hard to say. In terms of, I think the things that I learned most are the way that you build a great business is you actually need to add value to the consumer. And Harry's, I think, there are like so many direct-to-consumer brands, and many of them are great. They have great designs, great packaging, but they don't actually fundamentally make sense either as businesses or as direct-to-consumer businesses. Harry's really did, and they really identified a pain point in like men's lives, which is that razors are way too expensive and they were locked behind cases, and Dollar Shave Club had found the same pain point, but it really was one that that was real, and I think they kept coming back. It was really their North Star when they were thinking about marketing, when they were thinking about internally motivating the team. And when I was thinking about different categories and then thinking about contact lenses, eventually realized that there was a different in some ways, but similar pain point and sort of rationale for the company to exist. And that I think was really informative.
Talk to me about the launch. So You launched it with a co-founder. What are your thoughts of co-founder, no co-founder?
You need a co-founder. It is almost impossible to do a business, like any startup, I think, without a co-founder. It is just so hard and emotionally difficult in some ways. And you read about this a lot, but it really is true that if you don't have someone there with you, like in the trenches, my co-founder, Jesse Horowitz, I met him when I was an internship in college. We stayed friends. If you don't have a co-founder, especially a co-founder who you know from before, like I don't see how you could do this.
In today's world, Hubble seems like a no-brainer, right? The idea that you can get cheaper lessons delivered to you directly, compared to the $700 price range, I think it's about $1 a contact now. This seems like a no-brainer. Did you face any challenges then, either convincing investors or the marketplace?
Yeah, I think, there were... It's funny. You hear stories about how you go to like 1,000 VCs before you find someone who likes you, and that actually wasn't our situation in the first raise. People, especially VCs, sort of immediately got what we were trying to do. Many VCs had the same pain point themselves in the industry, I guess in somewhat different ways, which I can chat through. And I think my experience at Harry's was, I think, pretty valuable, and I think VCs recognize that, and my co-founders' experience in finance was also really helpful.
So it seems like for you didn't face, those difficult challenges in terms of convincing that there is a marketplace for this, right? But I think that is because you are not selling an entirely new product; you're just selling it in a different way with a different experience, correct?
Yeah, I think the thing that some of we sort of thought about 4 questions, I think, if I remember correctly, before we launched. The first one was, how do we find a great quality product? And how can we offer something that is at least comparable to what people are wearing today? And we spent a ton of time. I mean, this is why you think about startups as like incredibly glamorous, fun things to do. But in the summer of 2015, I spent like dozens of hours in the FDA databases, just going through every single FDA-approved contact lens manufacturer to figure out who had a great product, cold emailing them, trying to figure out a way to get in touch with them, getting in touch with them through regulatory folks who helped them get FDA approval in the first place, maybe they could be a conduit into them. So that was one of the things we needed to solve, and spent a lot of time on that before launch. The other few areas are contact lenses, obviously a regulated product, both by the FDA and the FTC. So making sure we really spent our time researching the space from a regulatory perspective was really important, and we spent more time on that maybe than anything else before launch. Third, there was a question, especially for the people who had been consumer products investors or more experienced in that space, about how you build a brand around a product that you can't see at all. Contact lenses are little plastic discs, they're not like razors where you could have different industrial design, or even mattresses or glasses. And so spending time thinking about that question was really important. And then finally trying to do anything we could before launch to prove out demand for this. Really, we felt would de-risk it for ourselves in terms of whether we wanted to do this full time, and de-risk this as an investment for an investor to see that there were people who, even before we had launched, were interested in the concept and the product.
So we're going to go back to the brand in a little bit, but how much of this had you on paper before you raised, or was this very conceptual sort of thinking, and how much did you raise on that first round?
Yeah, so the way that we went about diligencing the idea was really consistent with, we tried to put ourselves in investor shoes and say, if we were an investor, what would we be questioning, or what would the first objections be to this idea? Do you have a great product? Can you build a brand? All those things I just mentioned. And so, we had it down. I was a former management consultant before Harry's, and so I did make a PowerPoint deck thing as a way to organize my ideas. And then tried to fill in the deck after with research that we had done. But so we basically did that over the course of about 6 months. And then in our first round, we raised a lot. We raised $3.5 million in a seed, but it ended up being really important for us to do that because contact lenses, again, really regulated space, and actually pretty high minimum order quantities from the manufacturers we were talking to. So we needed to raise that much to be able to, have enough. It was that was the minimum amount we needed to break through with the manufacturers and make sure that we had done our regulatory diligence.
Yeah. Now, you've done several rounds of raising. Which one has been the hardest?
Probably the last round.
Why?
I think a couple of.
And you're at what round is this for?
I think we called it the series. Everything is everything's like Series A prime. Now, I think we called it the Series A3, but it was really a Series B. I think a couple of reasons. One, in 2015 and 2016, direct to consumer was really, really hot, and if you had like two random guys with a PowerPoint deck could raise a lot of money. And it's harder now, actually. I think people have realized that you can't just direct to consumer something and expect it to work. There needs to be an actual reason why it should be a direct to consumer business. And so that was sort of the market turned against direct to consumer in some ways. And I think the other issue with the latest round, which we raised a lot and obviously went very well, but another reason why it ends up harder in some ways, the more you go, is you could raise on the dream at the beginning. You don't have any metrics, and later you could raise on the metrics so you could show that the business is working, but it's also easier for investors to come at you at a lot of different empirical ways, like what is this number, why does this look like this, and you have to have good answers for all those questions. And so you're both selling the dream of continued growth, but also explaining why things are the way they are.
So you've had a very different growth path. I think your revenue has obviously gone very high, but you've managed to contain your staff to very, very small. Can you talk a little bit about that and sort of the thought process or strategy behind that?
Yeah, so there's a couple reasons, I think, for this. So Hubble now only has like 25 full-time employees, which sounds like a lot, and it is, and they're all great, but relative to some other companies of our size in terms of financial metrics, we're much smaller. I think there are a couple reasons we wanted to do this. First reason is Hubble's actually a pretty simple business, at least right now. We have one contact lens, different powers, but we have one lens, a daily disposable spherical lens that we sell in one way, which is monthly subscriptions. And we basically are only direct to consumer now. We have very small tests in other channels, but basically exclusively selling online and largely through Facebook and Instagram as our primary marketing channels. And so when you really simplify the business down to one product, one distribution channel, one funnel, it becomes easier to do it with fewer people. The other benefits, of having fewer people, and there's no sort of, I think, doctrinaire reason. Like if we are interviewing a great person, or if there's a need in a particular area, we are the first ones to hire in that area. But another benefit of sort of being slow to hire, or making sure that you really have the right people before you pull the trigger, is you really know that you need the person for that role if you're hiring for them. It's easy to hire forward, but then you're stuck with sort of having someone in a role who you don't need, and that's not good for them, it's not good for you, it's not good for morale if you let that person go, or if you have to, even if they're doing a great job, if their role isn't necessary. So that's another thing we consider. And then finally, we've actually found that in some ways working with external vendors allows us to move more quickly and more flexibly. So we have 25 or so folks full time, but the number of vendors we have externally on the marketing side, on the fulfillment side, the product, the actual product making side, is in the hundreds. And there are a lot of people who make this business go round, but in some ways having them be parts of separate organizations allows them to stay incentivized in the right way, and allows you to have more flexibility in terms of how you operate with them.
Have you considered owning a larger part of the supply chain? And what are your thoughts there?
Yeah, so our primary manufacturer is they're the largest private label manufacturer for contact lenses in the world, and they work with the big four, the sort of big four contact lens companies who dominate the industry today. And they're great, but a lot of startups get to a certain scale where they become larger than their supplier, and that is not the case. St. Shine, who's our primary private label supplier, is more than $1 billion publicly traded company. And so Harry's did a very interesting thing where less than a year into their business, they bought their supplier called Fine Technic and vertically integrated with them. It worked out for them for sure really well, especially since they exited about a month ago. For us, buying $1 billion company would be hard. I think one day, if Hubble continues to go well, I can imagine there being sort of more of a unification, but that's a ways away.
And how have you stayed so focused? What other experiments have you conducted in terms of different sort of products that you can do and that you've purposely dismissed?
Yeah, good question. So when you think about, I think it's really easy to launch new products that are tangentially related to the space, but you don't really have customer credibility to go into them. And that can really distract you. It could, confuse people about what the priorities are in the business. I think it could cost more money than you get in profit from it or in revenue from it. And so we've, just like on the hiring sort of situation, we've been pretty conservative here to make sure that we really have a great product or a great roadmap planned before we launch a new product. In the contact lens space, we have daily disposable lenses, which we think are the best way to wear contact lenses. So you don't really need cases, you don't really need solution. The next product that we are finally launching later this year is toric lenses for astigmatism, which is great, which is another daily disposable lens, but about 35% of people are astigmatic and can't wear a lens. And by far the most common question we get from customers and consumers is, when is torics coming? When is torics coming? Literally the day we launched, this was the most common question we got. And so we know it's been the most demanded thing from consumers, but it took us a really long time to find a great lens. And we really wanted to make sure that we launched with a great product. And so that's why only now, after more than 2.5 years, are we launching an astigmatic lens.
One of the things that has been incredible, I think, about your company is that you've built a brand around contact lenses, which you can't see. Can you talk to us about that process? Did you guys do that internally? Did you guys go to external people in terms of branding? Hubble, where does that name come from?
Yeah, so the name Hubble, first of all, comes from... So my dad actually came up with the name. So I like to say that it was me, but it definitely wasn't. It was him. But it was inspired by my girlfriend, who actually went to Princeton also, and is an astrophysicist. And so she works with the Hubble Space Telescope, sort of talked about it a lot. So that was pretty cool and sort of an homage to her in some ways. But we really like the name because it connects to something aspirational like space, which is kind of cool. It sounds like it's just a cool sound. Like Hubble, it sounds like huggable. It sounds like hubby. We like the name. And then actually, really importantly, it was not trademarked. We had another name, which we thought we were going to call the company for a while. I think it was Iris. And it ended up being the case that there was a Canadian company called Iris selling contact lenses, so we couldn't do that. But Hubble was good on trademark, and that ended up being really important.
Yeah, so in terms of the actual, though,
the
branding itself and packaging, how important was that from the get-go? And did you guys do that internally with your team, or did you guys hire an external party?
So we hired an external branding agency. I am, I guess, very left-brained. Jesse and I both are pretty left-brained and not very creative when it comes to visual or brand design. We both hired a creative agency, and actually hired our first or second hire was one of my best friends, a guy named Dan, who is a designer and went to Cornell Art School, and obviously a really smart guy, and worked with him as one of the sort of most important people in the company to help us build our brand with the external agency. And I think there are a lot of things that make up brand. People talk about, I think, brand in a really abstract way, but basically the way that we think about a brand is what's the consumer experience when they interact with your company, or when they think about your company. So packaging is one, website design is another, price, I think, is part of your brand, and how you talk about yourself, emails, affordability for us was a big part of that. Your marketing, all these things sort of make up your brand. And when we were thinking about it, the way we wanted to position ourselves was at a sort of affordable version of a great product, which is a daily disposable product, but really emphasizing the affordability, because Hubble really is about half the price of other daily disposable contact lenses. But we also wanted to make sure that, unlike all the existing contact lens brands in the market, which were like blue and white boxes, which had water jets shooting through contact lenses that looked like they were made in the 1980s, we really wanted to have a sort of different type of design that was more colorful, and that's been played out now in direct to consumer in some sense, but at the time it was a little bit more new, and we wanted something that people were sort of thought was cool to get each month that looked different than other stuff.
Now, you mentioned a lot of your customers come from Instagram and Facebook.
Yeah.
How did you first acquire your first customers?
Yeah, so the very first customers were mostly PR. We worked with the PR agency and got some great outlets to write about us, like on our launch day. think we had an article in Vogue, which was really cool, in GQ. We went sort of high end. We also had an article in BuzzFeed, which ended up driving many more customers than the sort of high end pieces. But those were sort of the initial ones. But really from the beginning too, it was paid social, and that's been our bread and butter from the very beginning. Increasingly, now that we've been in the market for more than 2 years, friends and family have heard about, friends and family, and that's become an increasingly large percentage of our customer base, people who've heard about us from their friends and family, which is great because those customers you don't have to pay for, and it shows that other people are having a good experience with your product and want to tell their friends about it. But really, in terms of paid customers, social is our go-to.
Now, a quick word from our sponsor.
In addition to being one of the best smart contracts blockchain in the world, with extremely low fees and easy-to-use platform, Qtum's proof-of-stake system lets anyone stake with as little as a fraction of a Qtum. To learn more and start building today, go to qtum.org. In terms of your customers, are they millennials, or how do you segment your customers?
Yeah, so direct-to-consumer is known for being like millennial-focused, and that's definitely true. The good thing about contact lenses as a category is it really matches the direct-to-consumer category, like the direct-to-consumer channel in terms of what it's known for. The vast majority of contact lens wearers are between 20 and 45, so almost definitionally millennials, or Gen Z, I guess, and 65 to 70% are women, interestingly, and that actually matches pretty close to our customer base.
I know you've experimented with paid TV.
We have.
Can you talk to us a little bit about that, which seems like a little bit archaic marketing channel, but you guys have found some success with it.
Yeah. You get to a certain point on paid social where, and we could go more into depth if you want, but there's sort of a volume to CPA curve. So if you want to acquire more customers, you can if you have better creative, but once you hit a certain level of just getting more efficient and better at your marketing, if you want to acquire more customers, you have to pay sort of incrementally more for them in any particular channel, including social. And so one way to acquire customers fairly efficiently is to, or at least theoretically, is to go to other channels. It not only needs to be the case that those channels are efficient, but once you scale to a certain point, they need to have enough reach that they actually move the needle for you in terms of driving dollars. And TV, even though, as you're right, it's archaic and is older, is by far still the place where you could drive the most marketing dollars. And so we went into TV really quickly, like 6 months after launch, because we knew that we wanted another lever to be able to drive our growth efficiently, and diversify away from social and Facebook and Instagram more specifically. So paid TV is worked for us really well. It's probably a bit less efficient than social, but you have to sort of evaluate the incremental customer you're going to acquire on social versus the first customer you're going to acquire on TV. And in that calculus, TV is definitely more efficient. And each of our channels, including TV, we push each month to the level of efficiency we want to drive, and then acquire the maximum number of customers we can at that level.
So during this time, have you seen any potential competitors come into that space? I mean, it seems like you guys are the number one modern brand direct to consumer other than the incumbents.
Yeah, we have a couple of really small copycats.
Okay.
We don't think about them much. They haven't raised much. They're not really growing that quickly, they're really very small right now. I think their issue is we spent many months finding the best supplier we could. And I personally, over like 6 months, wore 25 different brands of contact lenses. And we chose the one that was really high quality, at least at parity with other brands, if not better. And many of the other ones that we tried were unfortunately not at parity. But we sewed up the best one from the beginning. And some of the copycats are working with ones that are not quite as good, and I think that's hurting them in terms of their retention and their brand.
Talk to us about one of your hardest days.
Yeah, been a lot of hard days. They talk about how startups are like a roller coaster, and that really is that is so true. Like some days I'm incredibly on top of the world and euphoric, and other days I'm sort of more depressed about how we're doing and how we're going to do. It all evens out in the end. I think you probably should be not as high and not as low at any particular time, but that in retrospect. It's hard at the time to feel that way. Some of our hardest days, one of our early, in the first few months, we realized that we had made a mistake in, and this is on me too, as I should have been checking more carefully, but we had made a mistake in one of our spreadsheets, and we had assumed that every customer has one eye, like the Cyclops customers. And so we just under ordered our content by like 50% relative to what, or at least, yeah. So it ended up being okay because we were very unsure about our growth and had been doing well. And so we're really conservative in how many sort of safety months or safety stock lenses we had. But so it ended up just being okay, and we were able to provide context to everyone who was on a subscription and every new customer. But there was like a couple days where we just thought we were just straight up run out of context because we assumed every customer was a Cyclops.
That's incredible. I love that story. In terms of the future of retail, what are your thoughts?
The future of retail. Don't know if I'm an expert on that for sure, but I think it's pretty clear that things are going in an omni-channel direction, and most businesses are not going to be exclusively direct-to-consumer, exclusively wholesale, but some combination. It is also definitely not the case. I probably shouldn't, advocate this as a DTC founder, but it's definitely not the case that the store is going away. Mm-hmm. The store is a really efficient way to get goods to customers, and it is often really efficient for them too, or really great for the consumer too, not just the businesses. I think e-commerce is still only like 11 or 12% of commerce in the US, and it's growing, but that's not that much still. The store is, I think, going to have a place in retail for a long time. The other thing that I think is going to happen, and I'm involved with a new company that's part of this, is a lot of the direct-to-consumer brands, they make sense as individual brands, but the weakness of direct-to-consumer relative to a store is, Walmart or Target or whatever, they market for themselves, and you go to the store and you could buy like whatever, however many hundreds of products you want. Direct to consumer, every company needs to individually try to get the customers from Facebook or Pinterest or TV themselves. And that's much more expensive than having the customer just walk into the store. And so I think there's going to be more amalgamation or more consolidation in the direct to consumer world. There'll still be e-commerce, but I think moving to a world in which direct-to-consumer stores are sort of like more in a digital mall of sorts, which is, again, a project that I'm working on, I think is the future, because it just doesn't make sense for us to all pay Facebook millions and millions of dollars a month, every month forever. Eventually, I think we're all realizing that if we could just have the same customer who is buying Casper and Warby Parker and Hubble and Classic in one place, buying all the same brands, but just from one common location and being marketed to once, that's just a much more efficient way to get that customer.
Oh, that's very interesting. So are we going to see Hubble pop-ups?
Yeah, I think you might see Hubble on a new digital online mall in the next few months.
Okay, that sounds exciting. And in terms of the healthcare space, so you are sort of in between this direct to consumer, but have to deal with a lot of regulations.
Yeah.
How do you see the healthcare space evolving?
Yeah, I think we're seeing a lot that sort of telemedicine is becoming a really important part of healthcare. There's Hims and Roman and Candid, I guess is another, Smile Direct Club, another part. Keeps. There's a lot of businesses that are recognizing that the internet could be a great way to, not only ship people product and tell people about it, but provide service. In this case, getting someone a prescription or getting someone a diagnosis. Software is like eating the world, as they say. And so I think this is just another area in which telemedicine is an unstoppable force. I think it will be probably, for regulatory reasons and for rational reasons, connected to an end patient provider. It won't be purely, at least in the short to medium term, it won't be like a purely automatic process. I think there'll still need to be a medical professional at the end of the process or part of the process. But technology facilitating the doctor visit, I think, is just so obvious that it's going to continue to grow.
In terms of the landscape right now for direct-to-consumer companies, where do you see opportunities? You mentioned that it's definitely harder to raise at this point in time.
I think so. I'm actually also involved as an advisor in a couple of new companies. One is a stroller business called Mockingbird. HelloMockingbird.com. I'll plug it. It's a great stroller. It's like half the price of Up-A-Babies and Bugaboos. And then a new winter coats company actually is also I'm advising, and that's on the way. So that should be cool. I think the biggest areas where there probably should be direct-to-consumer businesses and where the model really works are areas in which you can make enough dollar margin from the first shipment to justify the cost of acquisition. So what do I mean by that? So let's say your margins are 50% as an example. If you're selling deodorant, which Native, which is a company I really respect, which sold to P&G a couple years ago, like bootstrapped to $100 million valuation. It's an incredibly impressive company. But they were selling deodorant for like $20 to $30. That was possible in 2014, 2013, when Facebook prices were much lower. But it's really hard to do that now because Facebook prices are much higher. You need to sell a product that costs enough, so your average order value is high enough with your margin to make up the cost of acquisition, which is going to be, at least 30 or 40 bucks. And if you want to make a profit on each customer, you need to do the math on like, okay, my product sells for X, my margins are 50%. There's going to be some percentage of people are returning. I need to pay Facebook for each customer, and I need to cover my overhead. And then at the end, I want a profit. And then when you just, when you go down the list, it ends up being there's not much room to play with unless your price point is high enough. And so the stroller business, the winter coats business, there are a few other ones we're thinking about. The categories where I really think there are opportunity are ones in which the margin is the margin works for the way that direct consumer works with the Facebook auction.
I'm curious about the winter coats. What makes them so unique?
Yeah, so that one is really, really early, and so I probably shouldn't say too much. But great winter coats now. You probably know this better than I do, but great women's winter coats especially cost like $900 plus. Like Canada Goose is a really expensive coat, and they have a great brand. It's a great coat, but really expensive. I think one way to think about this is similar to glasses. Like Warby Parker's glasses are $95 to like $200, and that's not nothing. Zenni Opticals it's a great business, are a quarter of the price of that. But when glasses are being sold for like $500 plus, $100 glass, pair of glasses is really inexpensive. Same thing for Casper and mattresses. And so trying to do that in the winter coats category and make a really high quality coat that would otherwise go for like $1,000 and charge much less.
So why don't we just jump into some rapid fire questions and we can take it from there.
Great.
Okay. How much do you sleep?
Probably 7 hours a night on average.
What are you reading now?
I'm actually rereading Master of the Senate, which is like a 1,200 page book on Lyndon Johnson's days as Senate Majority Leader, which is one of my favorite books, but I haven't read it in like 10 years, so I'm rereading it.
What founders do you admire?
So the guy who started Native is a guy named Moise Ali. Bootstrapping that business to $35 million in revenue and $100 million valuation is really impressive in 2 years. It's much harder to do that than what I've done, which is raise a lot of money and then get the business to a certain place. You need to be so disciplined to do that. So I really respect him. Dave Heath of Bombus has done something really similar. I really respect him. Outside of the direct consumer space, I think this, probably a pretty familiar one, or maybe not, but John Bogle, who started Vanguard, I think is also a Princetonian actually, and probably added more value to like American business than almost anyone else. So really respect him too.
Do you consider yourself a success?
I think when we land the plane on Hubble, meaning not just have a on paper valuation, but actually realize that valuation in a liquidity event, either like a sale or an IPO or whatever, then I think that will be more solidified, and I'll be able to say this has been successful, like more in a more justified way. But so far, it's going much better than we expected, and well, and really happy with our progress so far.
What's your favorite life hack?
Favorite life hack? I don't have many great life hacks. That's a good question. I find that in terms of forcing myself to do something, I really believe in inbox zero, unfortunately. And so if I email myself a task, I will force myself to do it that day or the day after. And so that's a pretty shitty one, but that's probably my best life hack.
What is one belief that you hold true that other people would disagree with you on?
This is really going out there, but I am a ethical vegetarian, which usually people hate those sort of high and mighty, highfalutin people. But
are there unethical vegetarians?
There are people who are vegetarian for like health reasons or whatever. But Peter Singer took a class with him. He has some fairly out there views, but his views on animals I think are pretty spot on, and I think it's interesting. When I talk to people, I actually think most people agree with the idea that we should, like, factory farms are bad and we should be, we should be nicer and kinder to animals. So maybe they don't disagree with it, but in practice, they often don't live by that. And I think they should.
Do you meditate?
No.
What is the best piece of advice you've received?
Best piece of advice I've received. I think it's very hard at the time to appreciate it, but things that seem like disasters usually are not. And you should just be chiller about stuff until you see that something like 100% is like a huge deal negatively, because you're going to have little hiccups so often that if you get upset on each of them, and one of our investors I think has been really good at hammering this home and has been always very calm and very relaxed about stuff, and seeing him have that approach has really helped us to not overreact to stuff, or at least now. In the beginning we did, but less so now.
Thanks so much for listening to that episode. New episodes launch every Tuesday at 7 a.m. Eastern Standard Time. If you want to continue the conversation, you can find me on Twitter at MyraSeha007, and I'll see you next time.